Assalamu alaikum everyone. My name is Fizan Ali Sofirwala and I'm a one student at Rehan School Islamabad campus. So viewers, today I am here with the new Maya. So our today's Maya topic is analyze current economic patterns and their global effect. Let's start our today's Maya. First of all, call the Maya for some questions.
Hi, what's up?
Okay. So, my first question from you is what are the most important economic trends shaping the world today? So, please give me a very interesting answer and very long answer on this topic. I'm waiting for your long and interesting answers. Let's start your today's answer.
Okay, so you want to deep dive into the big economic trends shaping the world right now? Here's what I'm seeing, and there's a lot happening, frankly. First up, we've got this huge shift in global demographics. Aging populations are becoming more common, meaning smaller workforces, bigger pension demands, and slower economic growth in countries like Japan, Germany, Italy. That creates pressure on healthcare systems, increases dependency ratios, where fewer people are working to support more retirees, and forces countries to look at immigration to fill labor gaps. This isn't just a rich world problem, though. China's birth rate is falling fast, which creates its own unique economic challenges given the size of that population. Then there's inflation, which has been a massive story. The pandemic created all sorts of supply chain disruptions. Things got stuck in ports, costs went up, and then we had huge demand from stimulus checks and pent-up savings. The big question now is whether inflation is really transitory like they originally thought, or if it's becoming more ingrained. That drives central bank policies, the Fed, European Central Bank, etc., who raise interest rates to cool things down, which can stifle economic growth in the short run. On a more geopolitical level, deflation is picking up steam. COVID made countries realize how dependent they were on supply chains in places like China, and then there's the war in Ukraine, which has reordered trade flows and created energy insecurity in Europe. We're seeing more onshoring, friendshoring, regionalization, basically countries trying to bring production closer to home or work with political allies. That adds costs, but also resilience, some would argue. Then there's the tech revolution continuing. AI is probably the biggest story here. AI could have huge productivity gains and disrupt basically every industry we know. It also creates inequality. High-skilled workers who can use AI effectively stand to benefit immensely, while there's concern about job displacement for people doing more routine tasks. That's sparking conversations about wealth redistribution, retraining programs, and maybe even universal basic income. Energy transition is enormous, too. Countries are investing massively in renewables, solar, wind, geothermal to address climate change. That's driving down costs for renewable energy, but it also creates infrastructure challenges, needing new grids, energy storage solutions, and transmission systems. Plus, there's the whole politics of energy security. Countries want to reduce dependence on Russian oil gas, for example. Finally, debt is a ticking time bomb. Government debt soared during the pandemic, and now higher interest rates are making that debt more expensive to service. Corporate debt is high too. If we see a recession, there's real risk of defaults and financial instability. So that's a quick tour of what's happening: population trends, inflation, deglobalization, the tech revolution, energy transition, and growing debt levels, all happening at once, of course. What aspects of these trends stand out most to you, or are you curious about?
Okay, so my next question from you is how is inflation affecting in different countries? So please give me a very interesting answer on this topic and very long answer on this topic. I'm waiting for your long and interesting answers. Let's start.
Okay, let's break down inflation's impact across different countries. Anything really uneven, depending on unique circumstances, policy, responses and exposure to things like the Ukraine war. Starting with the US, inflation peaked around 9.1% in June 2022, the highest in 40 years. A lot of that was initially driven by huge demand during the pandemic and supply chain. But Biden have responded by aggressively hiking interest rates. They've raised rates at the fastest pace in decades. As of right now, they've brought inflation down to around 3.1%, but it's still above the Fed's 2% target. The big story in the US is whether their strong labor market will continue or if those rate hikes will ultimately cause a recession. In Europe, things were more dramatic. The Ukraine war sent energy prices skyrocketing because Russia supplied a lot of gas to Europe. Germany, especially, heavily relied on Russian gas. This pushed inflation in the Eurozone up to over 10% in October 2022, more than twice the European Central Bank's 2% target. The ECB also raised rates, but the situation was trickier because some countries like Italy have massive debt loads. High could make that debt even harder to manage. Inflation now is closer to 2.4%, but its recovery feels fragile due to the energy cloud. In the UK, it's been a real mess. Brexit already created some economic problems before the pandemic. Then they had COVID and then the Ukraine war. The UK's inflation soared even higher than in the US, peaking at 11.1% in October 2022, the highest in 41 years. High gas prices and food bills really hurt families. The Bank of England raised rates to also saw pretty slow economic growth. It's been a really tough balancing act there. Inflation is still sticky at around 4%. Still above the bank's 2% target. In emerging markets, it's been even more brutal. Turkey, for example, has suffered from hyperinflation, exceeding 50% in recent months. The government initially tried to lower rates despite inflation, which made things worse, a pretty unorthodox approach. Their inflation has since cooled, though still far above other countries at roughly 65%. Argentina is another example. Inflation is around 250%. The government has implemented currency controls to fight inflation, but these haven't been effective, and it's creating a parallel market with a huge difference between official and unofficial exchange rates. In Asia, Japan stands out. They have to ultra low interest rates for decades, but recently started shifting to allow move a bit higher and have seen inflation around 3%. China has had much lower inflation because of COVID lockdowns. The economy slowed down so much that demand was actually weaker. But now China's economy is reopening. They're dealing with how fast to increase demand without spiking prices. What's really interesting is how it hits different social groups. Inflation's really tough on low-income families because they spend a bigger share of their income on essentials like food and energy. They have less wiggle room. Wealthier people can absorb higher prices more easily or even invest to protect their wealth. This disparity adds to social inequalities. One common factor across all this, governments are trying to figure out which policies work best. Rate hikes can cool things down, but they can also trigger recession. Fiscal policies, government spending, and tax measures can help, but also add to national debt. It's really tricky to balance all of these. So, global isn't just one story. It's a set of unique situations playing out in different countries with their own challenges and reactions. Does that level of detail get into what you were hoping for? Everything okay, Eric? Just checking in. Are you still
Okay,
there or
so
something happened on your end?
my next question from you is why are interest rates rising in many economies? So please give me a very interesting answer on this topic. So I'm waiting for your long and interesting answers. Let's start.
So, why are central banks around the world jacking up interest rates right now? Short answer is inflation. Remember how we were just... The root cause for rising rates is to try and get inflation under control. Here's how it works. When interest rates are low, it's cheap to buy. People and businesses want to borrow and spend on houses, cars, investments. That increases demand for everything. When demand outstrips supply, like we saw with supply chain issues and pandemic stimulus, prices go up. That's inflation. To fight that, central banks raise interest rates, making it more expensive to borrow. This has several effects. First, it makes it harder for people to finance big purchases like a house. When housing demand cools down, prices tend to slow down, impacts the overall economy. Similarly, businesses scale back on investment plan. Loans is now pricier. This reduces demand across the economy overall, which in theory should bring inflation down. The U.S. Federal Reserve is a prime example, keeping interest rates near zero during the pandemic to support the economy. But then inflation started surging in 2022 to 40-year highs, and they began aggressive rates, bringing them from almost zero to over 5%. The European Central Bank followed suit, raising rates even after the war in Ukraine. Trade-offs. But the reason they did that is that inflation in Europe was getting super high because energy prices were going through the roof due to that war, not just inflation driving this. Sometimes there's pressure from strong labor markets. If unemployment and wages are rising, that can put upward pressure on prices. Businesses have to pay to keep workers. Central banks don't like that because rapidly increasing wages can get into this spiral where wages keep going up in response. That's wage price spiral. So raising rates can also help to moderate wage growth. However, it's walking. If you raise interest rates too quickly or by too much, you risk causing a recession because you're essentially cooling off the economy so much that economic activity begins to lose jobs. There's a ton of debate right now about what central banks will overshoot, creating an unnecessarily deep recession in the name of controlling inflation. In a nutshell, though, the main reason central banks across the globe are raising rates is fight inflation by making borrowing more expensive, demand, and hopefully brings us back down to more stable. What are all the needs with you?
So, my next question from you is how do
Just
central
checking in.
banks influence global economic stability? So, please give me a very interesting answer on this topic. I'm waiting for your long and interesting answers. Let's start.
I think there might be some audio issues. It sounds a bit broken on my end. Could you maybe repeat which topic you're asking about? It cut off mid-sentence, or I give you the detailed answer you're looking for. All right, it seems like there might be some ongoing connection issues here. Ready to chat when your audio clears up. No need to worry about starting over. If you're having trouble getting through, just let me know when you're ready to pick up conversation.
So, Maya, my next question from you is what impact does globalization currently have on national economics? So, please give me a very interesting answer on this topic. I'm waiting for your long and interesting answer. So, let's start your answer, Maya.
So you're asking about how globalization impacts national economies right now? It's a massive force. Really, countries work over the last few decades. Here's the breakdown. The biggest globalization did was integrate global supply chain. China, materials sourced from dozens of other countries. This is all driven by finding the lower materials in production, which lowers prices for consumers, but supply chains much more vulnerable. When something goes wrong in one country, like COVID lockdowns in China, or the war in Ukraine, it disrupts those chains, creating shortages and driving up prices. Another big change is increased trade. Can specialize in what they're good at and export goods, services, lowering costs, improving efficiency. But that also means domestic industries face competition from abroad. Jobs can be lost if cross borders. This can bring capital to emerging markets, boosting their economy. If money suddenly leaves a country, like during a financial crisis, it can be devastating. Remember the Asian financial crisis of the late 1990s? This happened because huge amounts of capital flowed out quickly, collapsing currency values. The information is huge too. Global connectivity, technology, social media, all create interconnected markets and allow businesses to operate internationally easier than ever before. This leads to some great benefits, but also risks. Rapid dissemination of information, cyber attacks, potential economic contagion. Globalization's also had this uneven impact. Some countries have really benefited, China being the most famous example. Millions lifted out of poverty because of export-driven growth, but others, especially developed countries with manufacturing base, moved overseas in stagnation for some segments of population. A big part of this is technological change, automation, AI displacing jobs in the developed world, but creating new kinds of jobs in other places. Now we're seeing this trend of deglobalization or regionalization. Companies are moving production closer to home or focusing on allies due to political uncertainty. The pandemic really sped this up. People realized vulnerabilities when supply chains broke down during COVID. So globalization doesn't mean flat world where everything's evenly distributed. It creates winners and losers. Governments are now having to balance competing priorities, protecting domestic industries, maintaining global relationships, preparing for future shocks, reducing carbon emissions, addressing inequalities. The big question now is whether this trend of deglobalization will last or if we'll see things revert to some kind of globalized order. What part of all this is most interesting to you? Maybe you're curious about something specific that stands out.
So, Maya, my next question from you is how has this COVID-19 pandemic changed global economic patterns? So, please give me a very interesting answer on this topic. I'm waiting for your long and interesting answer. So, let's start your answer, Maya.
So, how did COVID change global economic patterns? Honestly, the shift was pretty radical, and some of the changes are going to be with us for a long time. Here's the rundown. The first major shock was obviously the supply chain crisis. Factories shut down in China in early 2020, and suddenly everyone realized how much the world relied on a single country for manufacturing. Shipping bottlenecks started happening too. Ports got clogged up, containers got stuck, shipping rates went through the roof. Really exposed how lean those global supply chains had become, too focused on efficiency instead of resilience. After that, there was this huge drop in demand at the start of the pandemic. People weren't traveling or going to restaurants or shopping, so businesses tanked. Unemployment went way up. But then demand bounced back way faster than expected, partly because governments dumped massive amounts of stimulus money into economies, and people had pent-up savings from being stuck at home. So that rapid jump in demand created shortages, especially for goods, because supply chains couldn't keep up. This is where inflation kicked in big time, because demand was high supply and prices shot upwards. Then there was this acceleration of digital transformation. COVID basically forced businesses to become digital overnight. Companies had to let people work remotely. People had to shop online. Schools moved classes online. It accelerated trends that were already happening. That was expensive too, the digital divide, because a lot of people didn't have access to affordable broadband or devices to participate in that. The travel industry changed hugely. Business tried to come back in the same way as before because Zoom and Teams turned out to be good enough for a lot of meetings. But tourism did bounce back eventually. Although travel patterns changed, people favored different destinations. Debt levels went crazy. Governments borrowed huge sums to respond to the pandemic. That's going to be a problem for a lot of countries. Emerging economies were hit particularly hard with huge debt repayments and limited options. And then there was the impact on the labor market. The Great Resignation happened, people quit their jobs in droves. That's a mix of people reassessing their priorities after the pandemic and stimulus payments allowing them some financial freedom to find something else that they felt they could be happy at, or something with a better wage. So now we've got labor shortages, higher wages, changing expectations about work-life balance. The pandemic also increased inequality. Wealthier people did pretty well because they could work from home and invest in stocks, while lower income workers were more likely to lose jobs or have essential frontline roles. Plus, lockdowns impacted children's education, and that's going to have long-term consequences for inequality too. Kids from disadvantaged backgrounds fell further behind. In some ways, we're still dealing with the aftershocks of COVID, impact on supply, the rise in inflation, ongoing economic uncertainty. Those patterns were really significant shifts compared to the world we had just a few years earlier. Still, is your
Okay,
audio cutting out
so
again, or did something else happen?
Maya, my next question from you is how disruptions will affect the world economy. So please answer on this topic and very long answer, Maya.